Hello, Market Club members everywhere. Jeremy Lutz here with your midday market update for Monday, the 15th of October. And stocks are on the move today after a strong gain in retail spending suggests that consumers could be getting more confident about the economy. The Commerce Department said retail sales rose 1.1% last month after a 1.2% increase in August. Those are the largest gains since October of 2010. I'd also heard that may play a big part of that this month may be the iPhone 5 purchases going on, but we'll have to wait and see what happens if these numbers continue on the high side. Price of oil is also falling today, giving back the gains it had from last week. The focus is on weaker oil demand. On Friday, the International Energy Agency issued a new report predicting slower growth in demand for oil over the next 5 years. The agency also forecasts that supplies will increase as the global economy struggles to grow. And with that, let's move on to the markets and see what's going on today. We'll go to our portfolio manager here, and we'll just go into start with the Dow. As you can see, the score's a negative 60. We had that weekly trade triangle issue last week, signaling a change on the intermediate term trend. However, long term, we're still long this market based on our monthly green trade triangle. Intermediate term traders are on the sidelines. And short-term traders could have actually viewed this as a short entry last week. But now we are still kind of in a sidelines mode there waiting. But long-term, we're still long this market. Moving along. Get to the Nasdaq. Same score, negative 60. Much the same as the Dow. Long-term, we're still long this market. Intermediate-term traders are on the sidelines. And short-term traders had the possibility last week to go into a short position. Moving along to the S&P 500, same negative 70 or negative 60. Intermediate traders are on the sidelines. Long-term, we're still bullish this market based on this green monthly trade triangle. And short-term traders had the opportunity to go short last week, actually on Friday, with the score of with this weekly trade triangle at 1430.53. Moving along, crude oil. Crude oil is actually, like I said, giving back some of those gains it had last week. Actually, it's traded as low as 90.27 today. We actually had a red trade triangle last evening at 91.42, and telling short-term traders to go short this market from that 91.42 level. However, long-term, we're still bullish this market based on our monthly trade triangle. Weekly intermediate-term traders on the sidelines, and short-term traders could have taken this signal yesterday as an entry point to go short. Moving along, EURUSD still plus 75. It's kind of flattened out along this flat range here, but still plus 75. Intermediate and long-term traders are still long this market. Short-term traders are on the sideline. Gold actually had a big intermediate term reversal this week today on this weekly red trade triangle here at 1738.58. However, long term, we still expect gold to surge past the $2,000 level sometime in the next 6 to 12 months, say. So we could view this as a potential buying point because we were waiting for a bit of a pullback to buy more ounces of gold, and that very well could be that's what we're getting this week. Scores currently at negative 60. Intermediate term traders are on the sidelines. Short term traders could actually use today's signal to go short this market. Long term traders are still holding gold. We still expect it to rise above that $2,000 level, like I said. Silver's had a bit of a pullback as well, negative 60. Weekly and daily are both reds. Short-term traders could view this signal on Friday as an entry point to a short. Currently trailing at 32.71. Long-term traders will still see silver going up from the 31.30 level that we're currently at. Again, much like gold, you could view this as a pullback and able to buy more ounces of silver, get into a little bit better position. Copper is actually issued a red weekly as well yesterday, along with a red daily. So we had a complete flip from, I think it was like a plus 75 last week to a negative 60 now on the score. So intermediate term traders are on the sidelines. Long term, we're still bullish copper, but short term traders now, and based on the signals last evening, can take a short position based on the red daily and weekly. I also heard some reports that people think that there is a supply shortage for copper, which could drive the price up. So definitely something to keep an eye on. And we're just going to kind of take a look here at the Virgin Media, which I pointed out last on Friday as a possible 52-week high rule. If you took the trade on Friday around the close of around $30.70 is about where we were looking for it, somewhere between 30.70, 30.80. You're still long this market today, currently trading up 31.73, a nice little tidy profit. With how this is going, you set up today, set up to sell at the open tomorrow. So we'll recap this trade and see what kind of percentage we made tomorrow in our 1 p.m. update. And that's all I got to say today. Make sure you tune in tomorrow at 1 p.m. Every success in your trading day today. And if you have any questions, feel free to give us a call or comment on the blog. We'd be happy to help you. Enjoy your day, everyone.